Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's have a look on euro currency. So yesterday it was really an important statement from the Fed, although rate has not been changed, but the things that actually Jerome Powell said make sense. So it's very important. And at first glance, it could seem like the dovish statement for the dollar. Indeed, they have cut expectations on the gross domestic product, suggesting some decrease of this indicator, if not speaking about the recession. Also suggesting deteriorating of other statistics, increasing some forecast on inflation. And it might be treated as a call to start cutting rate from the Fed. But at the same time, they announced a very important thing, that they reduce for 20 billion per month the quantitative easing program. So they keep the same amount of buying of the selling securities off the balance for mortgage-backed securities, but they cut the amount for ordinary treasury bonds and notes. It means that they provide additional liquidity. So if we stop selling from the balance some bonds, it means that they will keep this liquidity inside the system and not taking it off. My suspicion is that the Fed is trying to use tools that they have on the liquidity to increase it without taking evident step of the rate cut, which might be treated as the signal of starting deteriorating problems in the economy, starting the first call in the recession. And they trying to use some other tools. For example, stop buying some bonds. They do not take the liquidity off the market and keep it. So from that point of view, we could treat it as a thing that suggests maybe the rate will be a bit higher for longer. If it was previously the inflation slogan, right now it might be about the rates. So Fed doesn't want to cut rate too fast. And this is understandable with the rising of the inflationary forecast. So from that standpoint of view, despite that they cut the forecast for the gross domestic product, I don't see that this is really a bearish moment for the dollar. And potentially this combination, when they are rising forecast for inflation and cutting rate for the gross domestic product, as you understand, simultaneously increasing the liquidity in the system. This is in general an inflationary situation. Combining with a weaker than expected gross domestic product, it might be the combination that called usually this as a stagflation. So we kind of the recession, but when inflation is rising instead of it's falling. All in all, this was really a very important statement. We will consider it in the weekend as usual, but that might explain why the market reaction stands as you could see on the markets. So on a daily chart, downside action that we discussed yesterday, although we decided to not take the position with it, only those who trade on intraday charts was able to consider it. If you remember, we talked about the free drive on the gross domestic product, on euro currency as well. And for now, this overall system, this strategy is working. So if you take a look at the cable, you could see that yes, the market has returned right back up. This moment of the Fed statement, return back to the top, but immediately returns down. So this free drive is still valid, and it might point on the possible deeper retracement. So on the dollar index, if you take a look at, we haven't got any grabber. That was potentially the risk for possible retracement. So here is market has closed below the MACD, so trend has not changed here, and we do not have any grabber pattern. You can see that dollar also starts rising. In fact, this bottom looks like the perfect shape of the double repo, and if we would have thrust that consists of the more amount of the candles, so now we have 1, 2, 3, 4, 5, 6, 7. In general, it could be treated as a double repo lookalike, because take a look, if we plot here MACD, you could see that in fact the shape of the bottom is very good for a double repo pattern, potential pattern. We just don't have yet the close above the 3x3. Once we will get it, that might be a signal for the possible stronger retracement here into the upside. All other tools we already have in place. So for instance, take a look on the euro currency. In general, here is the same top as you could see as in the dollar index. So taking a look at the euro currency, we have the divergence that stands in place with the price action, and this pattern suggests at least the taking out of these lows. So approximately around 108.70. So that's probably could be treated as a minimum destination point. So that might be some kind of the confirmation that market intent stands in the retracement. So trying to take the lows of the nearest bottom between the two tops is a very small target. Potentially, if everything goes in the same way, I would consider the target of this retracement, at least for beginning, it's 107.26 support area. So on the lower time frames, on the hourly chart, I see nothing really special. So market right now stands in the same range. It's now actually tending to the lower border. If you have taken position on the short side yesterday, it makes sense to move stops to the break-even based on the free drive that you have either on the cable, or maybe you're trading euro currency here. And the breakout of these lows will be good confirmation of the possible more serious retracement down. For now, until market stands above that area, above the lows, we could suggest some fluctuation inside of this range. So if you plan to take the short position, it will be better to wait for some retracements so that your risk-reward ratio will be better than now when the market stands very close to these lows. But this is very small fluctuations. It has no significant impact on the high time frames. So for the bulls, currently you could see some chance appearing somewhere on the horizon that maybe if market will keep going low and show a bit deeper retracement, this will be a good chance trying to take the long position somewhere from the 107 or at least around nearest fib level. So that actually towards what we have as a bottom line. Those traders who have the scalp shorts, you could keep them. Just don't forget most stops to the break even. To get more confirmation of the deeper retracement, market has to break these lows that we have. In this case, we will be able to expect deeper retracement. For now, we do not consider any longs because market still stands a bit overextended and we haven't got yet any reasonable pullback.